Aiboan, Vanakkam, Assalamu alaikum, and of course, a very, very good evening, good morning, or even good afternoon, wherever in the world you're joining us from right now. Welcome to our AmCham Sri Lanka topic in focus for the month of August 2021, where, of course, we talk about topical and timely topics. And today we're focusing again on the topic of trade shifts, but we're talking here about the financing and the financial growth aspect of trade shifts. To recap on the AmCham Sri Lanka Trade Shifts Initiative, recent events such as the US-China trade war, rising costs of labor, and the disruptions caused by COVID-19, of course, have led companies over the past few years to explore the options of diversifying their manufacturing and supply facilities out of a single origin. Now, companies such as Google, Microsoft, Sony, and Apple, among others, have moved to India, to Indonesia, Vietnam, and other countries in the Asian region, providing these countries billions of dollars in new export revenues. The value of these trade shifts is estimated at over $150 billion worth of trade within the next 4 to 5 years. And the potential for Sri Lanka to attract some of this business is, in the words of AmCham Sri Lanka's President Prasanta Jayamaha, very real and available. Now, recognizing this opportunity for Sri Lanka, the AmCham Sri Lanka collaborated with USAID to create and implement a project titled Trade Shifts, which is a multi-phased project aimed at identifying and attracting the low-hanging fruit for Sri Lanka from this opportunity. And as part of this initiative and this session, we have had multiple sessions and discussions with expert panelists on areas surrounding these shifts in trade and the global supply chain. Today, our expert panelists will share with you an in-depth view on the perspective of financing these growth opportunities. Now, without further ado, your panel this evening. We have with us Mr. Ajay Rao, who is the Regional Managing Director of the U.S. International Development Finance Corporation. He's an experienced impact investor in emerging and frontier markets, specializing in healthcare, agribusiness, and financial institutions. Sanjay Chandaratna heads sales and marketing at American and Effort Lanka as well, and which, of course, as you know, is a strong US brand that has established its presence in Sri Lanka over the past decade and more. And Sanjay will share his insights into the challenges and opportunities facing organizations investing and growing in Sri Lanka. Mr. Senaka Kakirivaragodage is the Chief Executive Officer of NDB Capital Holdings and brings to this expert panel critical insights into finance, venture capital, and private equity ecosystem in Sri Lanka. He's also director of several portfolio companies managed by Emerald Sri Lanka Fund 1 Limited, a private equity fund dedicated for Sri Lanka. Senaka possesses wide-ranging experience in investment banking activities such as IPOs, debt and equity placements, mergers and acquisitions, corporate restructuring, and advisory services and project financing. Now, facilitating and moderating this conversation with some thought-provoking and insightful conversations this evening, AmCham Sri Lanka President Prasanta Jayamaha, entrepreneur and investor by trade, passionate about developing, growing trade and investment between USA and Sri Lanka. Mr. Jayamaha, the floor is all yours, and I look forward to this interesting conversation.
Thank you, Rai, and good evening, everyone. As President of AmCham Sri Lanka, it is my privilege to formally welcome the speakers and the audience to this exciting webinar. As Rai mentioned, over the past 12 months, AmCham Sri Lanka led an 18 industry body initiative to study, analyze, and also qualify the efforts required to capture the new trade opportunities that are being created in a post-COVID world. These sectoral groups studied in depth the strengths, the weaknesses, the opportunities, and threats to Sri Lankan companies with a view to create a detailed source document for both the government and the private sector to work together, not just to attract, but to grab a multitude of opportunities that this will present. So some of these shifts are taking place due to COVID-19, but also due to labor cost changes, inflation that's happening in certain regional markets, geopolitical alliances, and various related matters that are taking place. There are many drivers for supply chain, but one of the three main strategies is either cost, resilience, and market proximity. Previous 20 years, primarily it was a cost driver, but in the last decade or maybe last few years, we've noticed that resilience and market proximity is now a rising factor. As such, margins alone will not be a key driver anymore, since sustainability and transparency of the supply chain will be a decision-making factor. Countries such as India, Vietnam, Bangladesh, and Indonesia, amongst others, in the SAARC and ASEAN region have benefited significantly with trade shifts moving out of China. These companies are leveraging on the opportunity and scaling. Some interesting examples are Apple announced that it will start producing its AirPods only in Vietnam. Google has set up a multi-billion-dollar fund for innovation just for India. Komatsu, a Japanese manufacturer, is now announced that its plants will move into factories in Vietnam. New Delhi has pushed for Apple and Samsung to set up their manufacturing in India. As such, Apple's Foxconn primary manufacturer is now investing over $1 billion in Chennai. And that's just in the electronic space. There are all areas of manufacturing that are seeing shifts across this region. And that's very interesting for Sri Lanka because we are there. We have an opportunity to make ourselves available and also scale our exports and FDI with these shifts taking place. So in today's webinar, we intend to understand the funding options available for businesses that are in the process of expanding, investing, or moving into Sri Lanka as a FDI as a result of these trade shifts. And the audience and the speakers we have today each will give a very interesting vantage view of that very interesting question. So my first round of questions, gentlemen, and thank you for joining us this evening. I welcome each of you for giving your time to share today. The first question is, I'd like to ask each of you the same. And given these shifts that are taking place on the global supply chain, can you share with us your thoughts on what the shifts in trade may look like in your point of view, and in the short and midterm, and how you perceive this affecting FDI and investment into Sri Lanka? I'd like to welcome Senaka for you to go first, please.
Thanks, Prasant, and thanks AmCham for inviting me for this. Absolute pleasure to be here. So I will start with what you just said. So there are two broad themes of these supply chain shifts. I would say earlier the world used to have this consolidated offshoring location, probably China as the preferred location. But there are two broader themes. One from China, as you said, you relocate to a few regional offshoring locations, as you said, could have been Vietnam, India, Indonesia, Thailand, and so on, or nearshoring, where the business goes back to home, closer to home, maybe US, Mexico, as far as American continent is concerned, or maybe Europe or Eastern Europe, whereas the European market is concerned. So how Sri Lanka will benefit from this, what FDIs we could attract as a country, I would say will largely depend on how do we respond to the driving factors or the causal factors of these trade shifts. So I would say one large big factor that will impact Sri Lanka is the regional market, a very large regional market where we are sitting in the right of the middle of it. 2 billion, close to 2 billion population, India, Pakistan, Bangladesh, the South Asia combined, and a $3 trillion economy if you take the region, and probably one of the fastest growing regions in the world as far as the current economic situation is concerned. So any large company, global company will not be able to ignore this region. So I think, as you said, the business are going to, say, India, say Samsung or Apple going to India to set up its manufacturing base. So how can we get plugged ourselves in to that value chain? For example, could we use mineral sand to add little more value and provide components to that, say, smartphone or electronic manufacturing industry? And there'll be a huge consumer market with that 2 billion population in South Asia. So could we add little more value to our agricultural value chain and cater to that growing market? So this is, I think, the way we respond to this and how we capitalize on the opportunity will determine how much of FDIs we could attract. So very simply touching on few of them, another big factor that will cause this supply chain shift would be, I would say, ESG factors, environmental, social, governance factors. And you know, not to look down upon them, but compared to the region, I'm sure Sri Lanka, particularly the manufacturing sector, I think our compliance standards are much higher. you see factories collapsing and factories getting burned in some of our regional counterparts. But Sri Lanka historically has been having a much better record in terms of compliance. So in the new world where customers are concerned about traceability, transparency, I think Sri Lanka, we can definitely score better in terms of a manufacturing location. And also if you consider the service sector, high literacy, the intellectual capital that we have as a country will provide, I think, a great base for anyone looking to relocate their supply chains to Sri Lanka. I think HCL is a great example. I think we saw an announcement a couple of days ago where they are hiring a large location in Sri Lanka in order to expand their growth in Sri Lanka. So we can provide that intellectual capital capacity as well. And of course, with the growing region, with the growing market, of course, there'll be things like education, tourism, healthcare, which we could provide from outside, being very close to those large markets, yet probably providing a slightly better, maybe living environment as far as the region is concerned. So I think these are the positive factors that will govern attraction of FDIs, in my view, to Sri Lanka. Of course, there would be some negative factors which might take FDIs away from us. Maybe we may not be the most cost competitive country in the region. Of course, things like labor cost, energy cost, we may not score that well. And probably ease of doing business is an area where the government is working hard on in terms of improving our competitiveness. So I would say overall, it depends on how we respond to this. But if you ask me my personal view, I think we could score well in the industries that will require maybe more transparency, traceability, and also intellectual capital. Maybe services, agri-related industries, and even places like pharmaceuticals where the standards and the traceability is very important. But I see maybe some challenges coming in the manufacturing sector. So it will depend on how we respond to those negative factors.
Thank you, Seneca. Very interesting feedback there and thinking. Yeah, we are certainly right about the value addition side. I think Sri Lanka has a lot of potential there in terms of adding intellectual capital and the value addition we can provide without just being trying to be a mass market exporter is the right word, I believe. You know, and transparency due to institutions such as JAF and showing the high quality of labor regulations and factories has branded Sri Lanka in a very positive way. So thank you, and there's certainly some things to think about there. I'd like to pass to Ajay just to get a view. Ajay, thank you for joining us. Ajay, I know you get a different view on how you see trade shifts taking place, and I'm sure you're seeing a big upside in India, and you get a lot of people reaching out in terms of, hey, we like to move in these parts of the world.
Prasanta, thank you for inviting me to this important meeting, and happy to be part of another AmCham event. I agree with what you had said previously. I think under the pandemic, we saw a lot of holes in the supply chain, from personal protective equipment on the healthcare side, all the way through to electronics. And I think manufacturers and even end-use consumers are just looking for alternatives. We at the DFC are focused on those essential and critical development areas. So for example, in healthcare, with PPE, gowns, other protective equipment, Sri Lanka already has this excellent export experience with textiles, tea, with foods, curries and pastes. We can Sri Lanka can use that expertise to focus on healthcare, just as Seneca was saying. I completely agree 100%. And DFC stands ready as the U.S. government's development financial institution to be able to support manufacturing in Sri Lanka, and looking at products that can be exported maybe to Europe and U.S., but looking at broader within the region. And we look at the Indo-Pacific region more widely, and serving the markets throughout Asia, whether it be South Asia or Southeast Asia. So that that's my take on it. And we're exploring transactions with companies where they are that we can look at manufacturing. I think also key is that we follow international standards. life and fire safety in a manufacturing facility is extremely important to us. Traceability, just as Seneca had mentioned. So that's what I would have to say from my end.
Thank you, Ajay. But just for the benefit of the audience, I mean, we know what DFC, and I mean, get a good understanding of what you do. Do you mind giving a quick elevator pitch on the introduction on the DFC and actually the proposition you bring to investors and even local companies?
Yeah, thank you for the opportunity. DFC, U.S. International Development Finance Corporation, we were previously OPIC, Overseas Private Investment Corporation, and we launched this new iteration of the agency in January 2020 and combined with one department of USAID called Development Credit Authority. So we can combine portfolios. This is a super exciting time. I moved out here earlier in October to look after the region and see how we can expand our portfolio here and especially in Sri Lanka. We went from under $20 million of portfolio exposure in the last year to almost $300 million invested in Sri Lanka. That's commitment through current exposure for our loans. We are looking at and that's been primarily in the financial institution space. I think a lot of you have seen the press releases out there, and we really enjoy working with our banking partners. And we're also looking to diversify that. So what's important to us now is healthcare, clean energy, climate finance, and just we're talking about this infrastructure, right? So working on enabling trade through transport infrastructure, through ports, and critically development areas such as water, and also agriculture. We can work in all of those sectors. We have a couple of basic products. So we have our traditional debt product, and we're there to add value to the system. So we provide medium, long-term loans and guarantees. We start at 5 years, but we go for the 10 and 15-year loans with a flexible grace period. We also have what's new and exciting about the DFC is that we have a new equity authority where we would provide equity to private equity funds investing in Sri Lanka, as well as direct equity. Where we're looking to participate alongside lead investors. And we have this interesting grants mechanism. We call it technical development, to be able to complement the suite of investment support that we provide. So our grants mechanism will do do two things. One is to enhance the commercial development, the commercial aspects of a transaction. So, maybe a transaction needs a feasibility study or market study to say that, this is a transaction is ready for a DFC investment, or to enhance the development impact, right? So looking at technical assistance to farmers, like say for an agricultural transaction, to do that environmental impact study that allows that manufacturing facility to reach international standards. So we're able to provide grants to allow Sri Lankan companies to reach those standards. So that's the basic uptake. Worldwide, we have a $33 billion portfolio. We're open in over 100 countries. And we're here and looking to continue to expand our portfolio in Sri Lanka and the region.
Thank you, Ajay. And just for clarity's sake, Ajay, the debt and equity financing is not only for U.S. companies; it's for Sri Lankan or regional companies.
Yes, I'm glad you brought that up. So now under the DFC, we changed the rules. We can finance Sri Lankan companies directly, and those are the transactions in our private. We don't necessarily. It's a nice to have. We say there's a preference, but it's not a requirement.
Thank you. Thanks, Ajay. And that's always an interesting thing to have on the horizon, at least availability of funding and an equity line in case of larger investments.
That's right.
Moving to Sanjay. Sanjay, what's your take on the trade shifts taking place, and how does that affect your industry? And are you seeing those changes coming in or going to come in the near term or medium term?
Yeah, first, Prashant, thank you, and thank AmCham for the invite. It's a pleasure to be here. To answer the question from an apparel manufacturing outlook, Till recently, primary sourcing strategy focused on low-cost sourcing and closer to market or just-in-time sourcing. There's a change of thought in low-cost strategy, and 62% of experts believe that just-in-time manufacturing models will decrease significantly. Two survey findings, one by law firm Foley and Lardner on global supply chain disruption, suggest a transformative shift in the way manufacturing executives typically think about the global supply chains, from a focus on low cost and inventory based to one that gives priority to stability and resilience. And this is where Sri Lanka becomes appealing. Manufacturing executives are taking prudent steps to manage risk in their supply chains while strengthening relationships and increasing transparency with suppliers and buyers. This is where these were a couple of the strategies that was identified by the survey respondents. Pre-COVID, obtaining information upstream on capacity fill or forecast would be difficult or near impossible. However, in today's COVID-19 environment, there is transparency and information flow throughout the supply chain. Addressing why Sri Lanka is an appealing investment destination. For starters, Sri Lanka is geographically well placed as a maritime hub and has the opportunity to strengthen regional trade relations with emerging economies such as India. Sri Lanka also has untapped geographical sites like the Port City project that can attract global investors, especially as it offers ease of doing business through the recently approved Port City Act. Finally, Sri Lanka, one can offer high quality labor at low cost, to proximity to large Asian markets, and 3 efficient trade routes out of Asia, making Sri Lanka an attractive investment destination. That's my uptake on it.
Thank you, Sanjay. And yes, one of the things we did discuss prior to the start of the call was the fact that the apparel industry has been very resilient through the COVID pandemic, and that has shown in terms of our export numbers are going well. I mean, and it's really helped the country because I guess the foreign exchange is, there are very few industries that are doing this well. So kudos to the team and kudos to your industry to, for keeping the country going and helping the economy keep ticking along. So, nice. Seneca, I'm passing this back to you. Seneca, you've been a forefront of the local investment space in terms of the ecosystem for investments, funding, IPOs. Can you just give us a quick snapshot, and especially our audience, on what are the funding opportunities or for growth and expansion that are available in Sri Lanka itself? So any companies that are setting up here, if they're using local channels, what is available, or even a low Sri Lankan company for expansion purposes? Over to you, Seneca.
Right. So if I approach that depending on the life cycle stage of a company, at an early stage, of course, the startup and the seed rounds of capital, our venture capital and angel network, I would say the size-wise, it's quite small, but yet we have a growing space in that angel funding and VC funding. Of course, you might know there's angel networks available, both local and overseas. Some are looking at it from, say, Indian angel network and Sri Lankan angel network. And in addition, some of the larger firms have taken this venture capital drive more on an industry focus. For example, certain apparel companies driving, say, apparel tech-related startups, or maybe consumer companies doing something with consumer technologies, and very industry-specific approach. Tech companies supporting, say, fintech, edutech, and so on. So I would say, albeit small, but yet we have a developing startup seed venture capital financing framework, And when you progress through the life cycle, once you become a little more mature, of course, there are some private equity funds operating from Sri Lanka and some overseas funds directly looking at certain spaces as well. So my experience is there are South Asian region-based funds looking at particular sectors like agri, renewable energy, fintech and education. So those are more favorable areas that they're looking from a overseas investors' point of view. But Sri Lankan family offices, Sri Lankan high net worth investor network, so they're generally looking at industries like banking and finance, again, consumer businesses, and of course, there's a growing appetite for tech businesses given where the world is shifting. So once you become a little mature, of course, you have the debt financing framework, typically led by the banks here. And also capital markets also have taken a role recently in terms of providing this debt financing, mainly in the form of structured finance instruments and also debentures, listed and unlisted on capital market. Of course, bigger companies can tap into public markets, IPOs, private placements, public offers. So these days we see a large appetite for public fundraising, given the revitalization of stock markets, again, in line with what is happening all around the world with low interest rate regime everywhere. So we see bigger activation of public markets as well. So I would say, depending on where you fit on this life cycle stage, there are multiple opportunities in terms of raising finance. And I'm sure there'll be a lot of entities who will be willing to help some of the businesses coming this way.
Thank you, Seneca. Seneca, is there any, I know you spoke about regional funds and also local funds or institutions. Do you see any limitation on ticket size on a debt raise locally? And do you think, if you're a big investments, bring your own funding in, it may be more advisable?
On equity space, Prashant, I've seen the large appetite has been around $5 to $10 million ticket sizes from overseas funds point of view. Although there had been some funds looking at larger ticket sizes, given the country's size and the market potential, most of the demand and appetite, or even the supply for that matter, has been around that $5 to $10 million ticket size, sometimes even slightly lower, maybe about $2 to $3 million also. On debt, I don't see such a restriction because typical project financing could go, I would say, anywhere between $5 to $25 million ticket sizes. And if it is large, of course, you can even assemble a syndication. So on debt size, I don't see too much of a restriction. But on equity side, depending on the profile of the funds that are looking at Sri Lanka, and also the capacity of local investors, I would say preferred ticket sizing would be between $5 to $10 million.
Okay, great. So yeah, so equity would be 5 to 10, debt could be 25 and above, depending on the size and scope. That's very interesting, Seneca. Thank you very much. Helps our audience, particularly any investors moving in, to understand the abilities locally. And that's where DFC is obviously also available in terms of expanding on the debt side if needed. Thank you very much, Seneca. Moving on to Sanjay. Sanjay, you're a US brand. You've had a great presence in Sri Lanka for many years. Can you elaborate on that investment journey for A&E in Sri Lanka and the final outcome of that experience? Any nice milestones along the way that has reinforced the fact that it has been a good decision to move into Sri Lanka?
Yeah. American and EFOD globally has been in operation for 130 years. And Lanka has been in operation in Sri Lanka for the last 3 decades. And in each decade, the level of investment has been greater, and so has been the frequency of investment. To give this context, in the early part of the last decade, the apparel industry grew significantly, or grew from 3.3 billion to 4.4 billion in a very short time frame. And A&E made investments to align to that growth. However, post 2015, A&E continued to make further investments for plant modernization and expansion. Now, While Sri Lanka has a positive track record for conducting ethical business and creation of long-lasting relationships with trading partners and companies, of course, this gives Sri Lanka a definite edge over competing nations in the region. The apparel industry in Sri Lanka is known to offer sophisticated solutions to brands or retailers and driving EHS and sustainable business practice. This aligned well with A&E as it operates on the periphery of commodity, presenting solutions to the industry, and it takes great pride in its sustainability initiatives. It is this alignment and the growth in the apparel industry that saw A&E make the investments it has done to date. And of course, we are seeing the benefits of that.
Fantastic. Thank you. And I know you got more things in the oven there, so just we obviously can't speak about it, but we are very excited for what A&E is doing in Sri Lanka.
Thank you.
My next question is actually pertaining to the FDI coming into Sri Lanka. So we've discussed that there are trade shows taking place. We've identified there is potential and opportunity. We understand that there are viable funding options. Sri Lanka is interesting and geographically placed very, very strategically well. But things are moving very slowly locally, and we can vouch for that. So hence, from a macro perspective, are there limitations, and what are the limitations and deterrents in the current way of things? And what would you like to see change or improve to further attract investment into Sri Lanka? Seneca, I'll start with you on that.
Particularly from a perspective of a foreign investor, probably one would like to see little more policy consistency in various areas. For example, what is our approach to imports? I mean, we know we have a bit of a import restriction regime, maybe more due to exchange reasons. But again, it will impact businesses in different way. Even if you are an export business, certain of these import regulations will impact your value chains, supply chains. So policy consistency, how are we approaching these macro issues? The exchange position, the reserve position, I think those macro variables will require a little bit of policy-based approach where the government gives the consistent policy framework. Look, this is what we are going to do. This is what we are going to achieve over the medium term. So that would help in terms of planning and policy formulation from an investor point of view. And also, if we are getting ready to cater to the new age economies, the new businesses, particularly we talked about intangible based sectors, the service sectors, even things like connectivity. We know Sri Lanka is good in terms of connectivity, but with the new style of work, working from home, probably things like bandwidth is becoming a bit of a bottleneck. And are we expanding on that infrastructure? What is the cost of a GB, which could be a key value driver going forward? So I think the digital infrastructure, I think we are okay, but probably if you want to aspire for bigger things, particularly as a global supplier or regional supplier, probably those are the areas where we need to develop, where most of the business would be done digitally, most of the interactions would happen digitally, and it's a large market we are looking at, and I think it's important now digital infrastructure keep growing, keep developing. In addition, maybe how we approach businesses. Look, I think tax concessions could be a bit of a beaten up word, but still, if there's a very large business coming in, it could be important to show what we could offer to them, maybe not in indefinite terms, but to attract them, some sort of a tax concessions could be helpful. Talking from my industry's point of view, let's say, if there's an equity fund coming into Sri Lanka, overseas equity investor, maybe you might need to offer certain capital gains tax advantages to them, because that funds will grow the Sri Lankan corporates and businesses. Thereby, there's a lot of tax revenue earning opportunity for the government through corporate tax, value-added tax, and so on. So there's no real need to tax the investor in the form of a capital gains tax. So maybe certain selected tax concessions in certain identified industries where we think we will have a comparative advantage and we will want to promote those industries. I think pharma is a good example where a lot of concessions and incentives have been given for pharma because it's a large import substitution industry we are looking at as a country. And also I think improving on certain things, we may call it ease of doing business. From the point of getting approvals, say if you are building a plant, from the planning approvals, putting up a building, even simple things like getting a utilities connection, water connection, electricity connection. Ideally, someone should be able to do that over internet, as it happens in probably developed countries, which probably is not the case yet in Sri Lanka. And I know probably entities like BOI is working hard in terms of getting that one-stop shop in terms of approvals. I think still we need to work on it and improve that latency time in terms of getting some of the red tapes cut and getting on with the business. So I think these are some broad areas where we could work on in terms of making it more investor friendly and business friendly as a country.
Thank you, Seneca. That's really good insight on even on certain industry level to have maybe not even concessions, but make it tax attractive, because the primal driver for those funds is to come in and invest and then obviously take their funds back. Yep. Yeah, very interesting situation there. Sanjay, over to you.
We are aspiring to be a financial hub, right? But if you take maybe Port City International Financial Center, it is an area where we are targeting. So it's imperative that we should be comparable with probably locations like Dubai, Mauritius, and so on. So I think we may not have too much of choice, but make it attractive.
Sanjay, over to you. What is your view on any limitation for deterrence, especially from the way, like you said, ANE has been doing multiple investment cycles into Sri Lanka? Any things you can see that we can change or improve?
Well, Seneca touched some of the key important points. I'll try and cover a few more macro points. I think on a more immediate note, dismantling policy of each successive governments on projects and plans is an absolute must. And Sri Lanka should have a 25-year long-term plan or strategy, which is seen through all governments. It is understood that you need to adapt, but the blueprint of the strategy should remain. That's point number one. Point number two, foreign relations need to be further improved, and bilateral policies to be worked out among immediate neighbors, and unilateral policies for both superpowers. Three, I firmly believe that Sri Lanka should evaluate fiscal policies in fast developing nations such as Vietnam, Cambodia, Bangladesh, some of the African countries, and formulate enhanced best practices in Sri Lanka, such as tax holidays and other fiscal benefits. Four, under the banner of economic development, ensure development of all the provinces rather than just the western and southern provinces, so that investors see equal opportunity and the people see better distribution of wealth. Lastly, implement an education system with English as the link language and the language of commerce, and bring it back to the 1950s when we taught the world to speak the crude English. Those would be my few key points.
And they were brilliant points, Sanjay. Thank you. I think it leaves usually most of after these sessions we do have a white paper that we put to compile and that's shared amongst the government policymakers. So this is thank you, and it's much appreciated. Ajay, over to you in terms of at the end of the day, we're looking at US companies that may want to invest or do joint ventures into Sri Lanka, and it doesn't have to be on the US, but we're looking at regional players maybe shifting their facilities or manufacturing facilities into Sri Lanka. And one of the things I'm certain that will be on their radar is the credit ratings that are playing out. So I'm going to ask you a question. I want just a view on it. Does Sri Lanka's current credit rating be a key factor for investors looking at a country to move in? And what can be done to mitigate that exposure or to put that risk, to mitigate that risk? Does DFC or other agencies have a hedge option for companies such as this?
So certainly, I think companies have their own internal policies of, with respect to credit ratings, and they have a kind of a go or no go policy. DFC does provide cover in terms of its guarantee product, of providing a guarantee, whether that be to banks or to wrap an entire transaction, and from between up to about 80% of a total project cost, in case of default of a loan. So that's one way that we involve. We're also involved with political risk insurance. So this is a traditional DFC product going back to our origins in 1974, where we provide risk insurance against political violence, currency and convertibility, and that type of cover, non-honoring of a sovereign guarantee. These are customized insurance product for each transaction. So we do have that ability. And when DFC invests in a transaction, the due diligence is comprehensive, that we see that we attract FDI, we attract other capital. So that's what we're there for, whether it be in a particular sector. In India, we started very early on renewable energy, clean tech, clean energy finance. And now it's just ballooned and has received its own FDI from across Europe and US and UK. We could do the same in Sri Lanka, and that's what we're looking to do, is to attract more FDI in the country.
Thank you, Ajay. So if I may summarize, there is a possibility of getting a political risk insurance, sovereign debt guarantees, but obviously that's not going to be at an investor level or company level, but those are available. And in terms of company debt level, default risk insurance is available.
Well, yeah, I would say a guarantee, against that. And you mentioned hedging, and I think that's another thing. If there's taking on U.S. dollar debt, if the commercial banks or the private sector can work on hedging solutions locally, or if that could be enhanced within the banking system, I think that would also encourage further companies to further take on foreign direct investment.
Yeah, maybe Seneca, you can elaborate on that. Is there an opportunity for local banks to actually help? Because I mean, when you hear this, there's a great marriage of DFC having funding lines available. They love energy, clean tech. The Sri Lankan government wants to be 70% renewable by 2030. So there is a demand for it. For a local investor or even a foreign investor, how you convert that, because you're getting the CEBs, I think the PPEs are tied up into LKR. So is there any instruments even workable locally that we can use to hedge some of that exchange risk?
So actually, I must say to our parent company, NDP.
We may have lost Seneca there.
That's why he was talking about the digital infrastructure improvement.
Okay. Oh, that's a good point. Sanjay, I'll quickly move on to you too, and we'll come back to Seneca. In terms of A&E's journey, Sanjay, have you been raising your investment capital and debt locally, or have you been using foreign funding lines to for those investments?
Well, we operate.
I'm sorry, Prasanth, I dropped out. You go ahead, Sanjay. I'll come back.
Okay. So we operate with one international bank and one local bank. And over the years, A&E Lanka has been financially very strong, and both banks have supported us throughout in the investment journey. And I also need to mention that we are confident that they will continue to do so. in our future investment journey in the outer years as well.
Okay, so you managed to raise locally and using international bank. That's thank you.
Yeah.
Seneca, over to you, Seneca.
Yeah. So I think you ask about are there any hedging mechanisms, because someone may be investing in dollars, but the business could be in rupees, so there's inherent currency risk.
Yep.
So as you know, Prasanta, probably we are in quite a peculiar situation in terms of history is concerned, in terms of our exchange situation is concerned. So if I answer honestly, today that hedging cost is quite high in terms of a swap cost, but even the government and the central bank is offering zero cost swaps. The structure is little detailed, and let me not go into elaborate that, but there are certain swap mechanisms and hedging mechanisms for an interested investor investing in dollars in a Sri Lankan corporate. So there are methodologies. And also through international hedging companies like TCX, there are certain hedging instruments also. But I would say what my understanding is today, given the situation, such cost is little expensive. But we can look at certain innovative solutions, structured solutions, like borrowing against a dollar facility, so that you will not take the currency risk. You can mitigate the risk to a certain extent. I would say it will all depend on the tenor and the type of the project you are looking at. But surely you could structure certain solutions out. And then, I mean, depending on the business you do, there may be an element of natural hedge as well, particularly if you are looking at export markets as well.
Yeah, I think it'll have to be on, if you export, you get the natural hedge, but unfortunately on the local power side, you get exposed to a rupee unless you manage to get a USD PPE contract from the power. Yeah.
At the moment, it has been in rupees, as you know.
Yeah, that would be the challenge. So, yep. But it's interesting to structure this because obviously we have an opportunity. Seneca, I'm going to ask you a question. Do you feel that in the next 2 years the currency will stabilize and we'll find a level there, or do you think? Is it a fair view, say 24 months would be where we'll see the runs and any changes?
So if you look at the historical context of why we are in this situation, I've been saying this in few other forums as well. That is because, I mean, in our balance of payment equation, the tourism revenue has been a very big component, right? So I think we had a great growth trajectory as far as tourism is concerned. And we were having 1 million tourists, 1.5 to 2.5 over the last 4 or 5 years leading up to 2018. So tourism contribution was about $4.3 billion as of 2018. But suddenly, you know, last 3 years, it's not only COVID, but even prior to that, with the Easter attack. So we had 3 consecutive years of a large hole created in that balance of payment equation. And even if you take on a net basis, $3 billion, we may have missed about, say, closer to $10 billion in terms of what we may have built in terms of accumulated reserve. Yep. And also it will contribute negatively to the sentiment as well, as probably reflected in certain rating agencies, because this was a too large component that we missed for consecutive 3 years. So I would say the situation would largely depend on how fast it could recover. I think our wish, of course, as Sri Lankans, is it will be as soon as possible. But realistically looking at, probably it will hopefully will start recovering from 2022, but to come to normal levels, probably it will take until about 2023, until the world vaccination comes to some mind, and also COVID develops in its various forms of manifestation, isn't it? It's a little difficult to predict, but I would say largely by 2023 or so, it should come back to normalcy. And when that happens, I think it's about the relative improvement of sentiment as well, because that's how markets function. So then I think we will see, or the investors will see, or rating agencies will see a little bit of reserves developing, and then we'll be able to probably roll over some of the debt stock that we have, which unfortunately is not the case today. So I think probably the challenge for the government is how to navigate that middle period, probably 1.5 to 2 years, and give the confidence to the market that we will not go too low from that situation. and until the recovery happens, to have bridging mechanism. So I think we need to look at that infusion, what we are missing, roughly about $3 billion annum, either through debt sources or FDIs, or probably some sort of asset sales. That's how I look at from a macro point of view.
I think sale of SOEs is the way to go.
Yeah, look,
Yeah.
I mean, crises require some hard measures, right?
Exactly.
So you need to take those actions. Yeah.
And that might be a good way to get the FDI in. There's some decent big size assets on listing, and maybe even partial listing outside, and get some investments into some of the large public sector enterprises.
Absolutely.
But
some of the initiatives have been triggered with regard to certain real estate related projects.
Yeah.
So let's see, you may have seen in papers, certain things are happening. Yeah.
Gentlemen, we're coming to the end of our webinar, and but I just want to quickly run through any questions that have been sent across from the audience. We have a few. Some of that is more, I believe, technical from AmCham's point of view on trade shifts, but I will just bring one up. This is on the marine and offshore industry. The statement here is that China manufactures most of the raw materials and equipment for that industry. That's marine and offshore industry. The Export Development Board in Sri Lanka is promoting the development of marine and offshore industry here. Is there a chance to entice US companies to shift facilities to Sri Lanka? So I might just pop in a few of my view and then pass it on to anyone in the audio, the speakers who may want to share. So this is one of the things that we have learned from doing the trade shift study, is that the infrastructure or the interconnected supply chains in Sri Lanka are very limited. So even moving the boat building or the marine and offshore industry into Sri Lanka, there's a lot of other ancillary supply chain manufacturing and services that have to come in, or at least start getting developed. And that's where the challenge lies. I think without trying to go for 10 different products or industries, I think it serves a country of Sri Lanka's size to maybe look for 3 or 4 and then invest into that as a nation, saying this is what we are going to be good at. We are going to build the infrastructure, we're going to build a support infrastructure, we're going to build the training, the development, the educational facilities, all that to serve these industries and be best in class for it. Because we can never be India, we can never be a Vietnam, we just don't have the local population or land size, all that infrastructure. So that's what we've learned from trade shifts. Does any of the speakers would like to share something on that? Okay. Thank you very much, Ajay, Seneka, and Sanjay. I'm going to pass it on to the Secretariat to do the formal closing. To everyone in the audience, I trust you enjoyed this evening. Over to you, Rai.
Thank you very much, Prasanta, and thank you, of course, to each of our panelists for your insights and everything that you shared with this forum here today. I'm sure that it will be of much benefit as we continue in this conversation of trade shifts, the shifts in the global supply chain, and what opportunities Sri Lanka can garner from it. As we've heard multiple times over this conversation, and during every time we've spoken about trade shifts, it's all about geographic advantage, rich human capital with the ability to cater to high-end knowledge services and high-tech manufacturing, lead time on delivery, production capability and resources, proximity, and of course, a definite means to attract business moving or diversifying in the region. Thank you again to our distinguished panelists for your insights and expertise shared this evening. And of course, Mr. Jayamaha, for your expert moderation and the questions that drew out the insights that we really needed to share in this conversation today. To all our participants on Zoom and our viewers on YouTube and Facebook, thank you for your participation. A reminder, as always, to subscribe, click the alert button, and of course, share the YouTube video, which is what will assist us to continue bringing AmCham's diverse and immediately impactful online resources to you free of charge. As we conclude, a reminder, as always, from our panelists, the AmCham team, and myself, let's keep our physical distance, masks on, hand sanitized, immunity boosted, fingers crossed, and spirits up. Stay safe, everybody. Good night, and God bless.
Thank you.
Good night. Thank you, everyone. Good night.